Hello everyone, and welcome to episode 1 of Avoiding the Biggest Investment Mistakes. In this video, I'll debunk some of the most common investor myths, believing that investing is a smooth ride up. Now, for the past several years, the US stock market has had really strong performance. Since the bottoming of the S&P 500 on March 9th, 2009, the S&P has gained 404%, setting 202 record closing highs through July 13th, 2018. And it's with this sustained success and low volatility that investors have really been conditioned to expect these smooth and steady returns going forward. It's almost like people have been hypnotized, and that's the myth. What you need to remember is that downturns are inevitable. We saw the tech bubble of the 90s, the Great Recession of the 2000s, and they remind us that eventually markets will fall. If you take a look at this graph, the S&P 500 since 1980 averages an intra-year drop of 13.8%. So how can you avoid falling into this trap? Well, the key is to make sure that you're prepared before a market decline happens, right? The emotional toll of a decline can be difficult. It hurts to see your account balances down every week. I know it, you know it, but the thing is, you need to stay strong and make sure you're not selling out during those big market swings, because that'll end up shattering your long-term financial goals. So, a good first step is to make sure that you have an investment plan in place. Having that in place will make sure that you're making less impulsive decisions, less emotional decisions, keeping you on track for the long term. Now, the way you get there is through active portfolio management, and that'll really enable you to make those type of investment decisions. But before you act, like I said, what you have to have in place is an investment plan. Now, in our next video, I'll discuss trying to time the markets and why that's another big investment mistake. And before we get there, in the comments below, let me know what you think. Do you think having an investment plan in place makes sense before a market decline? Thank you for watching.